Hi, let's cover my Elliott Wave analysis on Bitcoin. And in this video, I will cover my Elliott Wave analysis on multiple time frames. And if you're looking for a specific time frame, just check the timestamps in this video. So we're going to start on the weekly time frame. This is arguably your bullish scenario. 1, 2, 3, 4, 5 wave move to the upside is finished. And the move afterwards is labeled as a flat, wave A, wave B. And we're looking for this wave C to end. Common target for wave C is taking out the end of wave A at 74,420, and then it's interesting to keep an eye on some areas of support. I have two areas of support here between 67.5 and 63.1k. In general, the goal is to try and long the end of a wave C. Of course, we're on a weekly time frame, so arguably you're looking at swing trading or potential DCA for longer term investments, but you're looking for a bounce towards the upside. 1, 2, 3, 4, 5. After 5 waves to the downside, you're looking for a move back up, where the minimum target would be the 0.382. Now, if price is going to move all the way down to, let's say, 63.1k, the lower area of support here, then the 0.382 taken from the start to the end of wave C sits at 82.2k. If price moves to 67.5, the 302 sits at 85.7k. It just depends on where wave C is going to end. But by all means, you still want to have a longer sideways range. You have a move down from the all-time high, sideways range, quick move to the downside, that would be your wave 3. Look for a longer sideways range once more, preferably similar in time compared to what we had up here. And then price moves to the downside in a final leg, which is your wave 5. Preferably, your wave 5 is also going to move down on decreasing volume. You can see that now the volume is highest in this recent move towards the downside. So price is moving down, volume is moving up. Something that we like to see, highest amount of volume in a wave 3. But then we're looking for a wave 4 and a final leg down in wave 5. 5 makes a lower low, but on decreasing volume. Another scenario leads to much lower prices, but short term it's exactly the same as you're looking for a bounce in the exactly the same area. So 1, 2, 3, 4, 5, but instead of labeling this a wave C, it's labeled as a wave A. The setup, however, and the trading opportunity is exactly the same. It's just that the management is going to be different. When you're looking for a wave C, you preferably get continuation to the upside. So you're looking for a 5 wave up, another 3 wave down, and then continuation to the upside after a flat. Price just continues. While in a more bearish case, you're looking for a 3 wave, a corrective structure to the upside, not a 5 wave move to the upside. And that means the management of the position is different, but the opportunity remains exactly the same. And in this case, you look for a 5, a 3, and a 5. Now we have to wait and see. It's going to take a while for an impulse here to the downside to finish anyway. Probably towards the end of the year or maybe Q1 2026 that you're looking to end this 5 wave move to the downside. So we have time, and then as price moves towards the upside, we quite simply got to wait and see what we get. Now, if you then go to the 4-hour time frame shortly, then in the previous video, we were looking for price to finish this impulse to the downside from this high here at 107k. 1, 2, 1, 2, 3, 4, 5, 4, and we were looking for a wave 5 to the downside. As I was recording, price, I believe, just made this low, and I said, well, we could finish an impulse here at the low, or maybe one more, doesn't matter. Directional bias is the same. When 5 waves finish, you're looking for a bit of a bounce to the upside. Now, if we put that impulse in a daily time frame structure, then the impulse here, that structure here to the downside, would be your wave 3. So we then count it as a 1, 2, 1, 2, 3, 4, 5, 4, 5. Naturally, when you finish a wave 3, you're looking for a bounce to the upside, which is going to be your wave 4. Minimum target for a wave 4 is usually the 0.236 at 86.9k, which has been touched. And these fibs are taken from the end of 2 to the end of 3. Invalidation for 4, 97.2k. Common target for 4, 86.9 to 94k. It's quite interesting to keep an eye on the 302, which in general is quite a common target for a wave 4 anyway, but it is also in confluence with this range point of control at 91.3, which gives it a bit of additional resistance. So it's interesting to at least keep in mind. Now, after a wave 4, we're looking for still further downside in a wave 5. And you can see I have a double 1-2, which means I also have a double wave 4 and wave 5. And this will take a while. You can see that the 1-2s here in time took 36 days. 1, 2, 1, 2, and then price moved to the downside. So from the all-time high to the end of this wave 2, it took 36 days. Preferably your wave 4s and your wave 5s are take a similar amount of time or take a little bit longer. Usually wave 4s take a little bit longer, but hey, if we're going to say, you know what, it's going to take 36 days as well, then this structure, the impulse to the downside, would finish around the 27th of December, which is the end of the year. And if it's going to take a little bit longer, you're going to end up in January of next year, maybe even February if the wave 4s are going to be very long, like a triangle in a 4 really extends the time of 4s. But generally, you're going to be looking for the end of December or Q1 2026 to end a structure like this. It just takes time. Preferably, the current wave 4 that we're in, this one here, is going to take a little bit more time as well. If I take a fib time from the start to the end of this wave 2, and then the third click is at the end of wave 3, and I toggle on the 1-to-1 over here, so if price would do this and create a larger corrective structure and ends right on top of the 1-to-1, then wave 4 would be exactly the same amount as wave 2 in time. Now the 1-to-1 is sitting on the 28th of November. Currently, it's the 24th of November. Preferably, wave 4 is similar in size or a bit longer than wave 2. So preferably, you create a bit of a larger corrective structure. Now, the minimum target for a wave 4 has been touched. Interestingly, not on a daily time frame. Side note. So if I toggle on the 0.382, which is generally a minimum target for a wave 2, then you can see that on a daily time frame, the high that is created locally is this candle, which is the candle before the 382. So then one would say, well, we preferably get a larger corrective structure because wave 4 didn't reach the minimum target. But later, I went to a 4-hour time frame. And then on the 4-hour time frame, if we make sure the pivots are correct, so from the start of 2 to the end of 2 to then the end of wave 3, then you can see that over here, the local high, let me move it around, was made exactly on top of the 0.382. So in theory, the minimum target for a wave 4 is reached, and we have to be aware that you might start a wave 5, but preferably wave 4 takes longer in time and you create a larger corrective structure. And if we consider a larger corrective structure locally, also keeping in mind the fact that the 0.382 is an interesting target for a wave 4 with that daily time frame impulse to the downside, plus we have a range point of control here as well at 91.3. Keeping a double zigzag in mind, a WXY, is not a bad idea. Now, the thing is that price here moved towards the upside from the low in what I simply count as a simple ABC to the upside. I don't want to make things difficult. First of all, I have to admit that before today, I didn't even count this structure to the upside because over here, this was just messy. Weekend was starting as well. I prefer to do some other stuff. But as price was moving to the upside here, I did recognize an impulse to the upside, which then gave access to a trend and turn methodology structure. So basically, you have an impulse to the upside, overlap in the beginning, sharp move up, and then looking for overlapping structures to the upside into that daily naked point of control resistance that I had on my chart over the weekend at 87.5K. And that would have been an area of interest for then a potential short. And then once a short is taken, of course, price moved shortly above the daily naked point of control, but no problem because the bias was down, looking for an impulse to end and a move to the downside. And now it's just management. Also, for good measure, there were bearish CVDs while touching that area of resistance. So even when you don't really count structures in great detail, there is still opportunities to be had, but it requires patience. I, for example, had no interest in trying to analyze this structure here during the weekend as well and all the sideways mess, but this structure to the upside was quite clear. You have overlap here, sharp move up, and then you start to get a messy overlapping structure once again on decreasing volume. This is your peak volume in the sharp move towards the upside, which is what you like to see. And then as price is slowly grinding to the upside, you can see that price never moved above that peak volume. Volume is declining as price is moving up into an area of resistance. Trend and turn methodology, looking for price to turn around and then look for areas of support. And because this structure here to the upside looks like a clean impulse, I prefer to simply count this as an ABC to the upside. Now, an ABC to the upside and an A, B, and this being a wave C gives access to multiple scenarios, and it kind of depends on the retracement to the downside, because an ABC can be part of a larger zigzag family structure like a WXY that I have on my chart, wave W, wave X, and then eventually wave Y. Preferably a wave X would finish after this 0.382 Fib time, which is 9 p.m. today, Central European time. So preferably you create a larger corrective structure and then only move up at a later stage. But an ABC can also create a flat where this is a wave A, you look for wave B, and then a wave C, where wave B preferably also ends after the 0.382. It does require price to move to the downside quite quickly. At the moment it's doing, but it's going down a bit slow, but got to be aware of a flat. Triangles, where this is just wave A, wave B, wave C, wave D, and wave E eventually. Not the highest probabilities, because you want to wait for a wave D really before you start giving triangles high probabilities. Or a sideways WXY, wave W, wave X, and then you get a wave Y, for example, a flat, zigzag X, flat, wave Y, sideways corrective structure, and then you move to the downside. But I do keep an eye on the resistance above and the 0.382, but the minimum target for a wave 4 on the daily time frame is touched, the 0.236. So there's no need, right? There's not a necessity for price to move further to the upside, but the 382 is just generally a nice target. And when we consider some areas of support and resistance locally, daily naked point of control as support here, then we have the range point of control as resistance. It is interesting to keep in mind, does require us to wait for this move to the downside, and preferably if we're looking for a wave X, it takes time and it's only going to finish later tonight or tomorrow, because then we want to see a 3, a move up, move down into support. We still have some support down here as well, of course, but that would be too deep for a wave X, as wave X preferably stays above the 0.7 Fibonacci taken from the start to the end of W, so preferably X stays above 87.8K. And the 382 is generally a minimum target for a wave X, which is on my chart at 85.2K, which is not yet touched, as you can see. So preferably wave X is not yet finished in time and price. Preferably you create a larger corrective structure to the downside to touch this 382, taken from the low to the high of W, and preferably it's a larger corrective structure because of time, as currently price here is ranging before the 0.382 Fib time. A WXY to the upside, however, is still a bearish structure. It's a corrective structure, and bottom line, a WXY would lead to lower prices at a later stage, where then we're looking for a 4 and eventually a wave 5 to the downside to lower prices. Now the bulls preferably look for a corrective structure to the downside. So some 1, 2, 3, this is then some 4, and then some 5 to the upside. And you can see it's like some, because at the moment a diagonal an impulse to the downside has the higher probabilities, quite simply because it's not invalidated. You have the highest volume here in the low. Extensions, I believe on linear scale, are respected with the 1.618 taken from start to end over here, and then wave 3 preferably starts to touch the 1.618, which will easily happen if price moves down further. So it's just more interesting to keep an eye on an impulse first, and if an impulse is invalidated by price moving to 97.2K, then this becomes your new primary, where you have an ABC to the downside. Now bulls are then looking for, if C is finished here at the low, because again, as per the 1 hour time frame, this recent move down, we were looking for 1, 2, 1, 2, 3, 4, 5, 4, 5. At the moment of recording last time, preferably we were looking to end a 5 at the current low, or maybe one more, but at least a bottom to be made. And then you're always looking for a bounce, either a wave 4 or C is finished, and you look for more upside. But the short-term directional bias is upside in both cases. In a bullish scenario though, you want price to go to 97.2K to invalidate a bearish impulse to the downside, and preferably it does so in a 5-wave structure. 5 waves up, 3 waves down, that's your great long opportunity right there. However, it also requires us to see and count a high probability motive wave on the lower time frames. If this, right, if the bulls want an impulse up, if we want to see a larger 5 wave up, 1, 2, 3, 4, 5, you also want to see lower time frame 5 waves to the upside. Right? Wave 1 internally should be a 5-wave structure, and so is wave 3, and so is wave 5, but it starts with 5 waves to the upside. So if you then go to the 1 hour time frame, can we count a high probability impulse to the upside? Well, if we look at an impulse to the upside, it's not invalidated, but it's very close to invalidation. So if we count a wave 1, a 2, where this is then a wave 3, we look for a 4 and a 5. Your invalidation is the high here at 85.5K. Very, very close, of course. Price almost touched it. It's basically, I mean, you just missed out on the daily naked point of control, but that might be the save and grace because it's just above the invalidation, but it is super close to the invalidation, so not great. And something else that isn't too great here is that your wave 3 didn't even reach the 1-to-1 trend-based fib compared to wave 1. In other words, wave 3 is shorter than wave 1. That is not common. Generally, your wave 3 is an extended wave, meaning that commonly a wave 3 goes to the 1.618 trend-based fib extension that you then take from the start of 1, end of 1, and the end of 2. Of course, we didn't even get close to the 1.618, instead price didn't even reach the 1-to-1. That's not common, and that's not really something that you like to see, so it lowers the probabilities for an impulse to the upside. If an impulse is a consideration, then be aware that wave 5 has to be shorter than your wave 3. Let me just pull these on the chart so you can see from the start to the end of 1 to the end of 2, there is the 1-to-1, right? So the 1-to-1, there you go. And wave 5 has to be shorter than 3 because a rule in Elliott waves is that wave 3 can never be the shortest wave compared to 1 and 5. So we take a trend-based fib from the start of 3, end of 3 to the current low here on the chart, and wave 5 is not allowed to go beyond 90.3K. If so, this is not an impulse. At least not like I have it here on my chart. But yeah, not great, as you can imagine. And another option for the bulls would be to count this as a multi-1-2. 1, 2, 1, 2, and then look for a larger 3 towards the upside. The issue with this scenario and what lowers the probabilities is the fact that the second wave 1, which is a lower degree wave 1, is 3 times the size in time compared to the higher degree wave 1. So this is a very, very long wave 1 in time, even though it's a lower degree wave 1. Now, time is never an invalidation or confirmation, but it helps with probabilities. And the fact a lower degree wave 1 is 3 times the size of a higher degree wave 1, that's not great. It lowers the probabilities for this scenario. So in a nutshell, the probabilities that this is motive at the moment, multi-1-2 or an impulse up, is not high compared to counting this move to the upside as a corrective structure. A corrective structure at the moment locally has higher probabilities, which bottom line increases the probabilities to at a later stage still take out this particular low, as preferably this wave 4 becomes a larger corrective structure, keeping an eye on a WXY. Alternatively, we have all the other stuff like a triangle and flats and whatnot. But, you know, like this is at the moment what the probabilities suggest. The 1 hour time frame gives us clues on if this is corrective or motive to the upside. If bullish, we want to see a motive structure to the upside, but an impulse up, not great. Multi-1-2, not great. Well, if we count this move to the upside as an ABC, works perfectly fine, increases the probabilities, or I mean, probabilities remain the same as they are highest anyway for the impulse, or at least more downside at a later stage compared to a bullish scenario where you move up in a 5-wave structure. Even if price will move to the upside and touch the 0.618 at 97.2, the probabilities will initially be higher that you're looking for a larger W, X, and a Y, for example, so a larger corrective structure. But that is far-fetched thinking and not relevant, and I have no idea why I actually brought that up, but still, cool. Levels. Here are my volume levels. These are my favorite levels, so the areas of support and resistance on my chart. Let me zoom in just a little bit so you can see the more local stuff that I have going on. The daily naked point of control that I had here is already removed as that one was touched and price moved towards the downside. Then we have the time frame horizontals. We have a local daily here, and then you can see gap to the upside, some support down, and then the resistance is a lot higher. Then we have a few order blocks as well. up here. And then finally, this is more for the weekly time frame. I have important areas of support and resistance. Resistance respected. First main area of support 61.1, 67.9K on a weekly time frame. This is with the KRZ method, which is my own methodology. Very, very well respected, but I got to make a video on it and how to use it because it's a bunch of fibs, but it goes too far for this video. Then we check, let me refresh it here. Let's check the news of this week. So we have Tuesday and Wednesday, some high impact news. As you can see here, the setting is on high. If I click on medium, it's a full calendar, but we're not interested in medium. So Tuesday and Wednesday, November 25, November 26, high impact news, 2:30 p.m. Central European time, or in all cases. And yeah, just make sure you trade safe because it can increase the volatility on the chart. And if you're interested to check out this news website, then it is hexaplan.trade and then hashtag and then calendar. So here's the link. You can just put that in your browser. Very, very nice. And then we get to the conclusion, and it's relatively simple. On a daily time frame, the probabilities are higher for an impulse to the downside till proven otherwise. And that's also the approach from a more investing or trading approach. Sure, longs can be taken locally, but the initial mindset is going to be it's a day trade or it's a scalp. It's not going to be I take a long here, all-time high is going to be next, right? Because from a Elliott Wave point of view, your probabilities are higher for an impulse down till proven otherwise with a 618 touch at 97.2K. The moment that is touched, that is when the mindset is going to change to, okay, I'm going to keep an eye on the all-time high, and then opportunities that present themselves are going to be opportunities for swings or longer term investments, as my target is going to be taking out that high. Right? 5 waves up, 3 waves down. This is always an opportunity. If this becomes a 3-wave structure, well, then we'll get a 3, and we're going to get another leg to the downside. But you're going to be looking, if a 3-wave move down from all-time high, you're going to be looking for all-time high. At the moment, you have not invalidated an impulse to the downside. So naturally, any longs taken locally, from a mindset point of view or trading management point of view, are most likely going to be regarded, everyone has their own plan, but as like a day trade or a scalp, not a large swing trade because of the risk. One can enter here, of course, with a swing long, but if you move to the downside in a couple of 4-5s, you're going to be underwater here for at least another month, if not potentially even 2 months, and price just does this and ranges, and you pay fees and fees and fees and whatnot, and then eventually price moves up, and sure, you'll be able to get out break even and maybe some profit and all of that stuff, but you're going to just be stuck in a position for a long time that is not really moving and actually moves against you for most of this period. There is at the moment no great confidence yet or no high probabilities that this is a significant low and you move to the upside. And that is why an opportunity for the bulls, more like swing trading, can show itself later. It's not about sniping highs or lows. Sure, there is a local opportunity here maybe for longs. You can take a local opportunity, take some profits, and maybe leave some running just in case. But it's not the entry is not like, oh, swing trading. Which is different when you get 5 waves up and then 3 waves down. This is an opportunity that lends itself to a swing trade. Minimum target is this high, potential for continuation. So it's just like you can always take long and shorts unrelated to Elliott Wave probabilities, right? Daily time frame, these are the highest probabilities. Impulse down, alternative is an ABC to the downside, and that is just the way it is because the probabilities only change if you touch the 618 at 97.2K. That is when the probabilities change. And it's not about right or wrong. If price moves towards the upside and touches 97.2, it's not like the probabilities are wrong because it's just Elliott Wave probabilities. This is where the probabilities change. And it's not like the count is wrong because the count is absolutely correct. Impulse to the downside, right, with the ABC to the downside. But giving this the highest probabilities, there's no proof. There is no proof that this is the highest probability count. And even locally on the 1-hour time frame, when we check the structures to the upside so far, there is still no proof that this is the highest probability Elliott Wave scenario. So then with positions in mind, one has to be aware from a management point of view. So longs can always be had locally as well as shorts, of course, but just keep in mind on how to manage these things because even though probabilities change relatively late, right? From an Elliott Wave point of view, if you do move up and touch 97.2, they change relatively late. Long positions can easily be taken earlier as price moves to the upside. It's just the probabilities only change here. So at the moment, probability is higher for an impulse to the downside, which is this scenario here, compared to an ABC to the downside, which requires 97.2K to be hit. And locally on a 1 hour time frame, the probabilities are higher that this structure so far is an ABC to the upside. Preferably though, looking for a larger corrective structure to get a bit of a longer move in a larger wave 4 for the impulse to the downside. But at the moment, an ABC here, look for a wave X, preferably finishes after the 382s, time and price, and then eventually get a Y up or at least a larger corrective structure. I have a WXY on my chart, but it can still morph into other structures like a triangle as well, right? Even a flat, but then this move down has to go down far enough. At the moment, it goes quite slow. ABC. At the moment, I don't really see that happening. A sideways WXY is also still an opportunity as well, more sideways structure, but we'll have to wait and see. So preferably a wave X or a wave B ends after the 382 anyway and retraces at least to the 382 price level here as well. So that's something to at least keep in mind with the areas of support in mind as well. So yeah, that's basically it. 26 minutes, longer video, but hopefully informative, going through all the time frames. And of course, I use timestamps in my videos in case you want to jump somewhere. So thanks for watching this video. Hopefully you found it helpful or valuable. On the left, you see a video on the simplest way to use and trade Elliott Waves without even counting. And on the right is the Elliott Wave educational playlist to help you understand more about Elliott Waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye-bye.